Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Jonathan Twomley. How you doing, sir?
Doing great, Michael. Thank you.
Yeah, man, it's wild out there. I mean, some of the stuff we've been talking about for the last 12 to 18 months are happening in real time. And something we educated guess was still a guess because it was in the future, was that we thought rents would start to soften. We now have data from realtor.com and CoreLogic that rents and apartments are softening. In fairness, they often soften in the winter, but the degree of softness is several points higher than normal. But yeah, I mean, it's all happening, right? Cap rates are up, interest rates are up, taxes are up, insurance is up, rents are down, occupancy's down. I mean, it's all coming together, and it's if you bought a deal at the peak with bridge debt, it's not going to be a lot of fun, I don't think.
Yeah, I mean, there is, I don't want to call it a perfect storm
It
yet.
kind of feels like one to me.
Well, I mean, yeah, but listen, we're not talking like catastrophe or market crash, but we're talking about a lot of headwinds, I think, for people who are looking to sell their multifamily assets and get the pricing that they thought that they were going to get.
That
But
they
let's
need.
well, some of them need it, right? Some of them need
Yeah,
it. Some of them bought early, and they're fine because they grew their
right.
NOI and they'll be okay. They just won't make as much money as they had hoped, right? But some people who bought on bridge debt that was short term that need to refinance are now looking at an entirely different market, landscape, and it's going to be difficult for them to refinance these properties. Certainly at where they expected to, but even in some cases where they need to. But let's just talk about rents first
Sure.
here, because what is going on with rents? It is not really related to interest rates, even though interest rates have been, interest rates rising and rents starting to get softer related, but in a different way. What's
Sure.
going on right now is a combination of two things. One is, well, actually, I should say three things. One is that you've got, in a lot of markets, there has been really an historic amount of building of multifamily property, right?
Mm-hmm.
And so there is a lot of supply out there and a lot of supply coming, online, coming to market now. At the same time, inflation has taken a bite out of people's pocketbooks, and they're less able, even though they're getting wage increases, they're still feeling a bit skittish about
Mm-hmm.
things and aren't willing just to shell out huge amounts of money for rent increases, right?
Mm-hmm.
At the same time that you've got a lot of supply coming up. And then
Yep.
the third factor is that rents increased dramatically over the last couple of years.
Yeah.
It partially because of the lag of building, the household formation was exceeding new supply. But then in the last 2 years, you had just this massive population movement because of COVID,
Yep.
and people either wanting their own space, or people moving to a different part of the country, or people having a lot of money in their pocket because they weren't out there spending money on going out and stuff because of COVID. So they were able to afford really large rent increases. And a lot of that, as you and I had said before, was really just sort of pulling demand forward, right?
Exactly.
And
Yes.
so a lot of people who were, say, for example, living in a place like New York City, thinking, yeah, someday we're probably going to need to move back to wherever we're from, or we're going to move to some other city to get more space
Yep.
or have a lower cost of living. A lot of those people who were kind of thinking about that in the back of their heads all decided to move at the same time. And so that also, jacked up rents a lot, right? But it also meant that that normal trickle was like a flood, and now it's back to like less than a trickle because it all happened all at the same time. So
Yep.
we're seeing all these things happen all at once, which is resulting in rents, either rent growth flattening or rents outright declining in certain markets, right?
And I
And
think this is just the start. I think the statistical anomaly of October and November compared to the last 2 years is just the beginning. I think we're heading back to a normal market where rents generally get soft in the winter. Um,
but here's
that's
another thing that's going on. Sorry to interrupt you, but like,
yeah.
it, one of the things that drives me nuts about real estate investors, and it's not just real estate investors, it's investors in general, is that they tend to think that whatever's happening right now is going to happen forever.
Oh
Right.
yeah.
So,
Oh, for sure.
and they will
They
argue
just
with you.
extrapolate forever. Yeah.
Yeah. And they will argue with you when you tell them, hey, you should be aware of reversion to the mean. They, 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 they want
They
to have
lose their mind.
they lose their minds, right? And they don't want to think about it because they've made a lot of decisions based on that, extrapolating that line like out forever, right? On the same trend. So
Yeah.
2 years ago, everybody was saying, New York is dead, right? Rents dropped by 20%, everyone's leaving. Now we're back, rents are at historic highs in New York. There's
Historic. I read it a couple weeks ago, $5,000 or something crazy for that.
you
I mean,
can't
record
find
highs.
can't find an apartment. I mean, the crazy thing is like everybody's moving into New York City to live here, but nobody wants to work. They all want to work from home in New York City, right? They don't.
Yeah.
It's the weirdest thing. Like they don't want to go to their office in New York City anymore, but they want to live here, right? And then nobody wants to commute into the city either, right? So
Yeah.
it's crazy. Everybody is moving into the city right now, and
Huh.
but the places where you're seeing rent declines are like the stars of the COVID market, right?
Of course.
All the places
Reversion to the mean. Yeah.
right. So all those places so for 2 years, you have spectacular rent growth in places like Austin and Atlanta and Las Vegas and Phoenix, right? Yeah. All the places that people were going because of COVID, and the same people were saying this is going to last forever. Well, lo and behold, it's not lasting forever is over, and you're seeing rents declining because they basically got too high too fast and it was not sustainable. And now you have all this additional supply coming online in those markets. I mean, the funny thing that I guess not funny, but I mean the thing that I'm noticing about what's happening right now is, say 10 years ago, at the end of the great financial crisis, when people still had a memory of like the before times, so before endless cheap money, right? When the real estate cycle used to last 7 years or so, it was just common knowledge that places like Atlanta, Phoenix, Las Vegas, name a couple, Indianapolis is actually one of them, like that they would just like overbuild in the good times and then they would crash hard, like hard. Atlanta, like people forget this, but 10 years ago, investors would not touch Atlanta with a 10-foot pole. They were just, it was the last market to emerge from the great financial crisis.
Yeah, I remember banks saying we won't lend in Atlanta.
Yeah, people were just like, no way, no how, I will not go anywhere near that place, right? And then it became like the star of the recovery belatedly, and then in COVID it just blew up, right? And so, but now what we're seeing is like, hey, those same markets that everybody knew, in the past were always subject to these booms and busts. Well, it's happening again. And why? Well, it's because it's sort of the way those markets operate. It's very easy to build, right? So when times are good, you get a lot of construction, and then they overbuild, and then it all crashes, and then you start it all over again, right? Then absorption catches up, and then you can start building again. It's sort of classic real estate cycle stuff. But that got suspended for a while, and it went on for such a long time because of this extended boom that people sort of forgot.
Free money.
Yeah, people forgot that that's what has always happened in these markets. Now, just to take this a little further, something that I find really interesting is what's happening in Texas, because Texas kind of missed out on the great financial crisis. And the reason
they had at least for single families, they had a very different lending structure. Right? You couldn't do these NAGAM loans there.
Right, exactly. So Texas didn't have a big boom. It didn't have a huge run up, but then as a result, it didn't have a bust either. It kind of just was like steady Eddie through the whole early 2000s, right? And so I think a lot of people took the wrong message from that, which was that, Texas will never have a crash.
Yeah, Texas is safe because it wasn't affected by the Great Recession.
Right. And as I've said before, what happens is because of investor psychology, it often is the case that something that is safe will attract enough investors to make it risky, right?
Exactly.
So because everyone assumes it's safe, and then they all pile in and drive up prices to the point where it's risky. So what you're seeing in some Texas markets now is that you had an incredible run up of prices over in this expansion, and an incredible amount of new supply coming on the market. And now, at least in some markets, you're seeing a lot of softening, and it remains to be seen whether, if they continue to have incredible population growth, maybe this will be a very short, soft period, right?
Maybe.
But it really depends whether that's going to continue at the same level or not. And if you kind of look demographically, just the number of people available to move is
it's dwindling.
So we'll see.
A lot of people moved already.
Yeah. I mean, I'm not saying Texas is over. I mean, by any stretch,
no, of course
I think it's going to continue to grow at a really healthy pace for quite some time. However, I think that it is no longer a market that you can look at and say, hey, Texas is not subject to these booms and busts. I mean, it always was in the oil patch, but that was different. In the places
reasons,
not part of the oil patch, that it was, it was much more just sort of like steady as you go. And now I think that it's become a much more boomy and busty market. And again, for some of the same reasons as those other places, namely because it is so easy to build, right? It's very, the government makes it very easy to build there, which is great. I think that's the way it should be, but it's just, it allows the market to get ahead of itself, and then
it allows the market to go too far.
And then there's a painful correction when the music stops, right? So we maybe see that, maybe not, but it's just
I just like the fact that, again, we have receipts. People can go back on our playlist and really hear. We talked about 6-9 months ago, because again, we're both accredited investors. You actually you are a syndicator, you look for deals. But I was telling you, I was seeing just unrealistic assumptions. And I always started with rent. I still remember the one that said they assumed 5% rent growth for the next 5 years. I'm like, what, are you kidding?
Yeah.
How is this possible?
Listen, people were doing that in order to make deals work at the pricing that they
don't beat up your Excel spreadsheet to make it look good. That's not good.
It's not good, but that's kind of where the market went. Like, people, in order to do deals, they had to kind of make those sorts of projections. The thing that's amazing to me is that the banks were going along with it, right? That you think that the banks would have been the ones to kind of put the brakes on that. But if you looked at, even looking at CoStar, I mean, you look at CoStar, and CoStar would be projecting, they were more conservative than that, but I mean, they'd be projecting, 5% this year, 4 next, 3 the year after that.
Next, 5,
and that, and if you kind of like followed those projections, it made it a whole lot easier to make the deal pencil out, right? Especially when you get,
of course it would.
Yeah, no, but yes, I mean, it sounds pretty obvious, but I think a lot of people were in a position where they really had no choice. But that wasn't
I
smart.
don't know. Yeah, I mean, what I saw going on, and I'm so glad we called it out early, is a couple of people got in the game lucky with timing.
Yeah,
they had an exit that made like tons of money, and then other people tried to copy it, and they didn't realize it was timing and luck versus skill. And there's pain coming.
It's funny, like, I used to talk about this a lot in the context of, say, like the Brooklyn housing market, right? Where when I first started investing, I thought, like a lot of other people, that the way that you invest in real estate is essentially like try to get ahead of gentrification. Like, that's the thing. Like, you're looking for an appreciation play, get in the path of progress, and and what was always happening was people were looking at like what happened in certain areas of Brooklyn, where the housing prices just, over, say, a 10 or 20 year period, had just dramatically increased, right? And they were, and everybody looks at that and they're like, okay, well, that means I can just project that same growth into the future.
Let me do that again.
No. But the problem being that, like, that was a unique situation in time where a lot of people there were a lot of people who were sort of, what do they used to call them, like pioneers or even homesteaders. I think it's kind of like a terrible term if you think about it, but like people who were willing to go and buy brownstones in neighborhoods that were not really that great at the time, and they paid very little money for them, and then they just rode that. But they didn't go buy them as investors speculating. They just went to buy them to live in them, right? And then because they needed, they wanted to buy a house in Brooklyn, and that's where they could afford it. And then they got lucky, and then, they made all this money. So people then were like, oh, we can replicate that,
Yeah.
and I think that you had a lot of people doing the same thing in the multifamily world, where the last 2 years you had this just bizarre confluence of events that, between cheap money and all the stimulus money that allowed people to pay more rent and these population movements, you had just this incredible run up of prices in just 2 years. Economists will debate whether this was a bubble or not, but sure looks like one. But then a lot of people saying, well, look what happened last 2 years, that's going to happen in the next 2 years too. And that's always faulty reasoning, right? You have to look at the circumstances under which it happened. But
it's going to be fun to watch. Again, we've been putting this out there. You have your playlist on this channel. I think it's just Jonathan Twomley. You can go back and see the warnings that we've put out there. And I'm excited personally because I think there's going to be an opportunity for me to buy my biggest building sometime next year or the year after.
Yes.
And we called it, and we're going to hopefully execute to that.
This is what I want people to keep in mind, though. Like we keep on talking about all this bad news, except, you got to understand that for Michael and I, this is good news, right? I mean,
it's great news.
We're like excited about this. Again, don't want anybody to suffer, but if people did bad deals, this is the danger that that you run if you are overly aggressive in your assumptions, because if things change, and they may not change for a long time, right? And the longer they don't change, the more people say stuff like, well, hey, Twombly, you said be careful 3 years ago, and look what happened. Nothing happened, so I was right. And like, well, it's true, but you still had to be prepared for this, because, well, now it did happen, right? And if you weren't thinking about it, you were in real trouble.
And again, we only talk about what we're doing. I sold stuff in 2019 because I thought there was some pain. I thought a recession was coming.
Yeah, me too. And that's why I sold.
Lo and behold, I lost $500,000 because a pandemic happened, and oh well. But I'm ready for the next step, because that little window of time was fake. It was, it was the Matrix, and now now reality's coming. So I look forward to buying my biggest building.
I mean, it's like, obviously I could have made a lot more money on those properties if I'd held them for another 2 years too. However, there's no guarantee I would have gotten out in time. Like, you can't time the market, right? And so maybe I would have, sold them just at the right time. I'm in one deal in Atlanta, or we sold it as a partner, where we literally sold it we bought it at the right time, sold it at the right time in 18 months, like made a ton of money, but it was all just luck. Right? So you can't predict, you can't plan for this stuff.
No, a lot of fun. I love this conversation. It's going to be so much fun to track next year, because I do think it's coming. But Jonathan, where can people find you?
Yeah, well, listen, I mean, if you want to be part of this, you want to get on my investor list, please Google Two Bridges Asset Management, LLC, and fill out the investor form. And if you want to join my general mailing list, you can get this free download called The Ultimate Checklist to doing your first 100-unit deal with other people's money. This walks you through all of the steps that you ever need to know how to syndicate a deal. It's absolutely free. Just go to my website, apartmentinvestorsclub.com, and you'll see where you can download it. You can also join my free Facebook group, also called Apartment Investors Club, where there's free videos, free content in the guide section to walk you through how to do syndications. And we just talk about it. We just have conversations in the group. We talk about, how to do deals, what you should be thinking about, the kind of stuff that Michael and I are talking about here. I really encourage you to go in there and ask me questions. I'm happy to answer them. That's kind of what I do. So
do me a favor, folks. If you go there, tell him you came from one rental at a time, so he knows his time with us weekly is well worth it. Jonathan, thank you so much.
Absolutely.